The Board of Directors of the World Bank today approved the largest ever annual lending to India, amounting to $4.345 billion. The approved projects will support the development of India's infrastructure and help public sector banks maintain the levels of credit growth. Of this, loans amounting to $4.2 billion are in response to a specific request from the Government of India for additional financing to help stimulate Indian economy in the wake of the global financial crisis. The three large projects which amount to $4.2 billion are $2 billion for the banking sector support loan, $1.195 billion for the India Infrastructure Finance Company Limited, and $1 billion for the fifth Power Systems Development Project. A fourth project amounting to $150 million for the Andhra Pradesh Rural Water Supply and Sanitation Project was also approved. Sustaining a high level of economic growth is critical for India in its fight against poverty. The Government of India has reacted promptly and effectively to contain the impact of the global crisis on India, with 6.1% GDP growth in the first quarter of the current fiscal year being amongst the highest in the world. However, it still represents a dip from the peak of 9.7% achieved in 2006-2007. These loans will help support India's efforts to regain and sustain its high growth path.
Loan number one, the one for IFCL, will help investments in infrastructure to take place. So roads that otherwise may not have been built, highways that otherwise may not have been built, will be built. The banking sector loan will help public sector banks to make credits that otherwise would not have taken place. So a factory may want to expand its production capacity, buy new machinery, they need credit. Then who can provide the credit? At this moment, the public sector banks will be equipped with the capital and the liquidity needed to provide this credit. And again, one more machine is more production, more employment, and so on and so forth. And the third credit, power grid, again, it will generate employment because you need to construct the transmission lines. You need to all the equipment. Equipment will be produced, and electricity will flow more evenly and safely into areas now which are undeserved of facing power shortages.
These loans will be financed by International Bank for Reconstruction and Development, IBRD, loans given to countries with a maturity of about 30 years. Out of the $4.2 billion lending, the biggest component is the banking sector support loan of $2 billion, which will help ensure that a shortage of capital does not emerge as a constraint on lending. The Government of India estimates that the country's public sector banks may require an injection of at least $4.8 billion during 2009 to 2011 to maintain the growth of credit. In the medium to long term, this will not only expand credit in the current year, but will also strengthen public sector banks during the recovery phase of the economy. This loan will also help in expanding access to credit for micro, small and medium enterprises, thus making more money available for India's rural economy. The second loan of $1.195 billion to the India Infrastructure Finance Company Limited, or IIFCL, will fund a range of infrastructure projects at a time when long-term private financing has been adversely impacted by the global slowdown.
We are very happy that World Bank is considering such a large amount of loan. Probably I think it could be the largest loan to a financial intermediary for taking the infrastructure growth of the country, because it needs huge long-term funds. I think this will pave a way for meeting the large infrastructure requirements. This loan is for a period of 28 years, and infrastructure also needs a loan of about 15 years and so. Normally you can't raise funds for such a long duration of 28 years. We have so far raised funds to the extent of only 15 years.
Projects that the World Bank will support through IIFCL will include, among others, expansion of national and state highway networks, power generation, power transmission, and ports projects. The third loan approved today by the World Bank Board of Directors was a $1 billion loan to Power Grid, which is India's leading central transmission utility. The 11th five-year plan has set a goal of power for all by 2012 at affordable prices. This project will help expand and strengthen the existing power transmission network, especially in the western, northern and southern parts of the country, to meet rising consumer demand.
When we initially started our operations, there was a lot of apprehensions in the minds of the people whether this team would be able to achieve this kind of target or this kind of nation building exercise. But World Bank did have faith in us, and they gave us the loan, and that was the starting point. Now we can see that Power Grid has become one of the largest utilities, and from day one we have started our commercial operation in a profitable manner.
The World Bank, which has partnered Power Grid since its inception, is providing this loan to help ease its demand for commercial financing.
One of the things that these three loans will do is to help the government of India respond to the crisis and to long-term development challenges in a way that will permit growth to remain perhaps at 6-7%. Now, 6% may look at a very high growth rate, especially if you compare to the US or France or Europe in general, etc. But it's a huge decline from 9% to 6%. And it's also incredibly important to help the reduction in poverty, because it's through growth that you generate employment. Employment generates income. Families have more income to spend on their kids, on their clothes, on their food. Nutrition goes up, health goes up, education goes up. And last but not least, it provides more resources for government to spend in social programs.